Hey everyone, welcome back to Finance Rocks. Today I have Andrew Lopez back on the channel to talk about bank account churning and kind of help you decide if it's right for you, if it's something that you want to do with maybe even your emergency fund dollars. So welcome, Andrew.
Yeah, definitely a pleasure being on. Definitely thank you for inviting me on, Roxanne.
Yeah. So you are the Andrew Lopez Finance. That's your YouTube channel name, and your podcast is by the same name.
Podcast is actually under the Andrew Lopez Fine channel, and so on anywhere where you can find just podcasts in general.
Okay. Great. Yeah, and you guys should definitely check out his channel and podcast. If you're interested at all in what we talked about today, bank account churning, why don't you go ahead and kind of share a little bit more about what you talk about on your channel?
Yeah, so you can kind of think of the channel as well as the podcast as like two separate things or entities. So on my YouTube channel, I predominantly talk about credit cards and just how you can actually like maximize credit card points, rewards, sign-up bonuses, and whatnot. And also a little bit of just general credit card news. And then on my on the podcast, it's just general, just finance things, just as so you can think things such as like how you can actually maximize your HSA and like good credit or good HSA strategies and just more just general just finance tips, tricks, and whatnot. So that's kind of a general gist of what I talk about on my YouTube channel as well as the actual podcast itself.
Yeah, great. So why don't we go ahead and get right into it? What is bank account churning and kind of what are the different types?
Yeah, so kind of take maybe like a step back from that. So like a lot of banks out there, when they're, as you can probably guess, one of their prime objectives is to acquire customers in order to generate a lot of revenue out there. And one of the ways that they do it is to try to put sign-up bonuses on any of the actual products that they offer. So the main products that they generally speaking offer, but that what most banks offer, come in kind of like four fashions. You can think of like investment accounts. So this is things like brokerage or retirement accounts, checking savings accounts, as well as credit cards. So because that they want to try to acquire new customers, they want to have that sign up bonus within there. So they try to I guess like bring people in by putting that sign up bonus there, and they do it in various fashions within any of those products. So kind of like for example within checking accounts, they might have like oh yeah if you set it or change your direct deposit to us, we will give you some sort of bonus. Or with like credit cards, it's predominantly within setting up some sort of minimum spend in order to actually get that actual bonus. And then with retirement accounts, it's oh just bring over X amount of dollars or X amount of money, and we will give you some sort of bonus or incentive to actually switch on over to us. And that's same general just for savings accounts as well, just bringing over a certain amount of money or a certain amount of dollars with it. So those are generally speaking kind of like the various like bonuses in themselves and kind of how you can do it. And in terms of the actual churning itself, basically what that is that you can basically hit a lot of these bonuses in multiple ways. So you can go from like bank A, hit that bonus, and then go to bank B right after it, and then kind of like continue that out for various banks. And even some banks in general will allow you to actually hit that bonus even multiple times. So as an example, with I know that the Chase Sapphire Reserve as well as Chase Sapphire preferred credit card products are pretty popular for the bonuses. So and they have actually a rule where you can hit their bonuses once every 48 months. So I know a lot of people they would hit that bonus once every 4 years or once every 48 months. So you can even hit the same bonuses whatever that language is within a certain amount of time frame. So that's just kind of like the general gist of like what churning is and what general products that banks would offer to actually kind of incentivize you to switch on over to X, Y, or Z product.
Okay, great. That was perfect. So like you said, the different types are like brokerage, account churning, checking account, savings account, and credit card.
Yep.
So this was one of the popularly asked questions on the internet is bank churning illegal? Uh, so you mentioned, that some banks will allow you to go back. So if you just want to address that, like, is what you're doing illegal?
It is not illegal, but the funny side tangent here, but you, depending on the velocity or how much you actually do it, will put up some red flags. So one time, this was like about like end of 2020 that I did like three bank account churns in like a month. And because I was trying to like connect them all to like my main bank account, uh, the actual bank just called me up for like, hey, are you like doing fraud here? So one thing I will say is do at your own risk, and you may it's totally not illegal to actually answer the question, but you may want to like look out at the velocity of what you're doing it, because some banks may suspicious they like be like, hey, is this person doing like money laundering? You're not doing money laundering, but it's you, basically you might want to do it in a fashion that it may not raise any sort of red flags with the actual bank that you're currently banking with or whatnot. So I will just put that disclosure out there.
Yeah. And so just so that people know, we're not saying, go and sign up for this thing a bunch of times with different email addresses.
Yeah.
Follow the rules that the bank has to offer, but you can take advantage of that, that bank trying to get clients, like you said, like it's for their advantage. Make no mistake, they make money by giving these sign up bonuses or else they wouldn't do it, right?
Yeah, exactly. And kind of even going off that as well, just you keep track of the bonuses as well, because even some banks they put in some like rules and like regulations where they can actually go ahead and actually claw back a lot of those bonuses. So as an example, like American Express is extremely notorious for this with a lot of their credit card products, where if you sign up for a credit card and you actually cancel or close that credit card in less than a year, they actually have something within their terms and conditions that they can actually go ahead and actually pull back that bonus that you actually got. So definitely advise, kind of like on similar note to what you're saying, read the terms and conditions just to make sure you're actually doing everything in a totally legal way that's totally legit and not breaking the rules, so you can actually get that bonus or whatnot in a totally legitimate fashion.
Yeah. And you mentioned, and I didn't know this very recently, but you mentioned that you can go back to the same company. And that makes sense too, from like them trying to get customers. Like, oh yeah, we want people that have left to come back. So they offer it again, like they open up those bonuses to you again after a certain number of months, and it probably varies for the different companies.
Yeah, it does. It's usually, generally speaking, in that 1 to 4 year time frame. There definitely are some that are longer than that. So, as an example, go back to American Express. I know that for some of their credit cards, it's like a once in a lifetime uh, stipulation, but there is a huge asterisk on that. That's a whole entire different rabbit hole that you can get into. But and there are other some banks on the opposite side where it's even less than a year. But generally speaking, it's they'll free up the amount of times you can hit that bonus about once every 1 to 4 years, generally speaking.
Okay. So, of the four kinds of accounts that you mentioned, how would you rank them? Like, which ones do you think are like the best that you prefer to do? Like, do you prefer like savings account churning, or do you prefer like credit card churning?
Yeah, so if I had to like, I guess kind of like rank them. So I just to kind of put a disclosure, I'll go ahead and just like rank like checking accounts, savings accounts, credit cards, and like brokerage as like the main four. So I mean, this is totally subjective. So I'll
Yeah.
definitely even like put that out there. But I would go like checking account, credit cards, savings accounts, and then brokerages. And kind of like the reason for that order is, generally speaking, checking accounts are the easiest to hit, and also the vast majority of checking accounts do not have some sort of hard pull in your credit. So if you are maybe someone that is like inquiry sensitive or like hard pull sensitive, you are generally speaking better off going with either a checking account, savings account, or brokerage account versus say a credit card. Generally speaking, so that's kind of like why I like that as well. Additionally, the requirements tend to be a lot less. So meaning, for example, most checking account bonuses tend to have some sort of direct deposit requirements, and they tend to be a lot easier to hit, uh, broadly speaking, for most people, because they could be like something like direct deposit, say a cumulative 500 or $1,000, and you could probably hit that within, call it 1 or 2 months. So it's a relatively easy or low barrier to actually hit, and a lot of people have some sort of paycheck that they can transfer over. And then kind of like maybe going down the list, credit cards would kind of be my second option, just because it's especially with a lot of like no annual fee cashback cards, or even some like no annual fee credit cards, it is a little bit easier to hit that bonus. But once you kind of get into that like higher, like mid-tier or higher tier credit cards, the bonuses can be like somewhat lucrative. So we're talking somewhere in the ballpark of 500 to even like $1,500 of an actual bonus. So the actual bonuses can be somewhat lucrative. Biggest con, you will be hit with some sort of hard pull on it. So obviously wouldn't recommend from that perspective. And then I guess with like the savings and check or savings brokerage account being the last two, the only reason why I tend to be, I guess, not as fond of them in some sense is just because they tend to offer some sort of higher capital or money requirement, which I mean, if you do have that sort of money requirement, it could be a lot easier for you to hit, but it is a little bit harder to hit if you are not necessarily having that large amount of money that could be required to actually meet those bonuses.
Mm. Yeah, that's interesting. I kind of thought you were going to say credit cards first because you talk about, um, credit card bonuses quite a bit. So I'm a little surprised, but no, that's interesting. I think so. I've done a little bit of all of these, definitely not as much as you have. As I've done I've done one full credit card churn. So get it, hit the spend requirement, get the points, and then redeem those points for travel. I've only done that once, but I do have like the 2% like cashback cards kind of thing. And so that's not really churning though. I just use that.
Yeah.
I thought of having you on the channel after one time we were talking about emergency funds, and you had mentioned, you could use your emergency fund for bank churning. And, we kind of disagree sometimes on like how much cash you should keep and how to optimize that. Like, should that be cash or should you really be investing your emergency fund? And so I really like this alternative that you brought up. Do you want to just kind of go into a little bit about how it would work if you were using churning with your emergency fund?
Yeah, sure. And also just as kind of like a full disclosure, I think since I've like watched your videos, I've kind of like slowly creeped closer towards like your position, maybe not 100%, but definitely closer to your position of like just general emergency fund, but kind of like digging into like what you're talking about, how you can actually utilize bank account churning for an emergency fund. Yeah, so there are the kind of I guess like three areas that you can actually use your emergency fund to actually get a better return with it. And basically they're kind of like within it was like three areas. Like the first one is within checking accounts that don't require some sort of direct deposit. So there are checking account bonuses where you can literally just take money, transfer it into that checking account with no direct deposit, and you will get that bonus within a certain amount of time. So that's
Yeah,
like a pretty
they
yeah,
base it on balance, right? Like as long as you
yeah,
maintain this level of balance, like if you always have $1,000 in there, right?
right, exactly. So they'll have like, oh, transfer over X amount of money and basically just stick it within the account for X amount of time frame, and we'll give you the bonus like right from there. So that's it's a pretty easy way just to kind of get a bonus from there. And it's generally speaking, the returns when you put it on an annualized basis will be like far greater than what you'll be getting on like a high interest savings account or something. And that's also goes with like that general bonus will go with a savings account as well. But I will say with most savings account balances or bank bonuses, they're generally within the 10 to call it 20,000 or $25,000 range. So the requirements will be generally speaking a lot greater or a lot harder to hit for maybe some individuals. But if you are somebody that you are maybe like saving up for a home or saving up for maybe a large purchase, I think that's where savings account bonuses can kind of come into play because you might be having that large balance within the savings account anyway. So that could be a good opportunity to kind of take that like large sum of money and get a pretty sized bonus within a savings account bonus. And then kind of the other area is within brokerage account bonuses, where it's the same general, just where you can just transfer on over X amount of money into a brokerage or retirement account. Now, one little hack with some of the brokerage accounts is that you can just transfer on over the money, and you don't necessarily actually have to have it invested within, any sort of financial product where you can just simply just transfer it on over. And as long as the money is on deposit within a brokerage account, you can get the bonus within a certain amount of time, and it works exactly like a checking account or savings account bonus where you just have to leave it in the account for X period of time to actually get whatever the bonus is. So that's kind of the general gist of using that. And you can kind of hit multiple bonuses, over the course of the year to actually build up your emergency fund. And you can even use like strategies where if you have like a significant other, you can like one of the people can hit that bonus one time, and then you can just have that other person hit that bonus as well, like right after. So it's like, having a family, but that's having the same emergency fund. You can hit the same bonus, call it two times within a year. And it's a totally legitimate way to actually build your emergency fund even like slightly faster.
Yeah, I recently learned that too. Because I was like signing up for, so I, as you know, I stopped working last year. And so, well, I do, coaching and stuff, but it's not as much as my income was before. And so I was like, oh, how does it work with a spouse? Like, can I sign up for a credit card and then my husband also sign up for them? And it turns out you can. So it's interesting then, like thinking about churning. Yeah, that makes total sense. You could sign up for it, have that money in there for the length of time, maybe it's 3 months, and then take that same money, close that account, and move it to, an account for your spouse at the same bank, and they get that bonus as well. So very interesting. Um, and I'm always looking for like psychological little hacks for being able to keep money. And I think needing to have it in a place for a certain amount of time, I think that also would help people like keep their fingers off of it. Like, um, there's other ways that you can do that too, but like
Yeah.
CDs and investments to an extent, even though most of them you can end any time, but kind of having that like deadline in your mind of like, okay, I'm not going to touch it for this amount of time, I think is helpful for general savings as well. So I think there's a lot of good benefits there for using a strategy of churning over your emergency funds to different banks. So
Yeah, I definitely agree because they as you're saying, they have like that strict guidelines of like, oh, if you don't keep it in here for X period of time, we're not going to give you the bonus. So it's kind of just like an easy way just to keep that like mental barrier of just like, oh, just don't touch the money. So especially too, if you're trying to build up an emergency fund where you don't want to touch it, it's definitely a good way to actually try to build it up there so you can actually just not physically touch it.
yeah. And it gives you a nice tangible goal amount too, because like you said, if most of them are at like 10 grand, really you'd need that amount of money. So that, it's often difficult for people to come up with how much money should I have saved. And, so that could be one way that you could make it tangible for your goal too.
Yep.
Where do you find the information for churning? Like, are there particular sites that you like to use, or do you just go out to their sites every month?
Yeah, so there are two sites that I use in particular, and they're everybankbonus.com as well as Doctor of Credit. Personally, I like everybankbonus.com a little bit more just because you can essentially filter the state you live in, the amount of direct deposits that you can be able to actually put in the account, as well as the amounts of savings or like side cash that you might have to actually hit a bonus. So you can kind of like adjust it for your specific situation, and you can even adjust it to whether it's a business account or a personal account, because even business accounts you can actually, churn some bank accounts with, and you can even break it down even further to whether it's a checking account, savings account, investment account, money market, or CD, or you can. It's a really good account for basically just filtering it for whatever you're specifically looking for, and which is pretty nice just because there are some bank bonuses even as well that they're even state or region specific. So whereas with Doctor of Credit, it's more of like a general account where it's just kind of like general news of just like, oh, hey, here's a new bank account bonus. But I will say that is the perk of Doctor of Credit, where it's like they kind of have like a news feed of just like, hey, these bank bonuses are out. So if you're looking more for like kind of like a quicker way to kind of grab attention of a better bank account bonus that's coming out just today or something, I would definitely recommend Doctor of Credit for more just like on top of it, like general news information of kind of like what bank bonuses are coming on and seeing and whatnot.
I think I've used mostly Nerd Wallet, but I haven't done any state specific or regional specific ones. Well, Montana, there usually aren't a lot of choices. So, so I was hoping you could talk a little bit about who churning is for. Like, at what point in a person's financial journey should they look at these? Should they consider using churning?
Yeah, so I'll definitely preface it that churning is definitely not for everybody because I can totally understand that there are some people out there that they don't want to have to deal with like switching the direct deposits or like having like 10 credit cards out there. So it's I guess for maybe like the point of which maybe somebody should think of it or like consider it. It's basically if you're looking for an easy way to like let's say make some extra money that's like somewhat passive, but not maybe not entirely, or if you're something that you maybe do some sort of like travel, whether it's for like work or like just for even for like personal use, and you're just looking for a way to actually cover that with the credit cards. If you're kind of maybe in that sort of situation, I would definitely say like maybe consider it. Also, if you're maybe somebody that you're not necessarily the biggest fan of your current bank and you're maybe like looking for other options out there, banking out bonuses is actually a good option because you can literally get paid to test out like a few different banks and see like, oh, maybe you like the interface of this bank or you like the features of this bank over here. So it's an easy way just to test out a variety of banks and literally get paid to like switch it on over if it was something that you're already looking to do. So I would say those are the types of people that if you were, if you kind of like fit one of those molds, I would say maybe like, go ahead and do it. But like I mentioned before, I totally understand it's not for maybe like everybody out there.
Yeah. It, it requires a lot of like detailed reading, reading the fine print, like you said, because it's happened to me before where I'm trying to get some kind of like, well, even using coupons or whatever. And it's just like, oh, gotcha. Like you didn't read everything or you thought it worked this way and it doesn't. And then I did want to mention specifically like for credit card churning, because some people struggle with credit card discipline. I have a strict 3 strike policy for myself. Once I, discovered that once I was responsible financially and had all my ducks in a row, and I do this thing where I like make sure I have like X amount of cash, like 3 times my possible limit in cash. So that way I could fill up the card, pay it off, fill it up, pay it off, fill it up, before I would run out of money. So just making sure that like you have some security in place if you're going to do credit card churning. And then like my 3 strikes rule, like I paid late one time. And so I have 1 strike against myself. So, just making sure that you have like some checks and balances, right? To make sure that you're using credit cards responsibly, because if you end up having to pay credit card interest, it's going to negate those bonuses really quickly, right?
Yeah, definitely. And that's kind of also one thing I even forgot to mention is kind of why I ranked credit cards as number two is for like partially that reason exactly that there are definitely people that um like Dave Ramsey is totally right that there's definitely a small segment of the population that you should not have credit cards. So if you kind of are kind of like as you're alluding to are kind of like fitting in that mold where you realize that you're not necessarily responsible with credit cards, avoid credit cards. Do not open credit cards if you can't handle them. Just totally avoid them. Also, even with a lot of the bonuses as well, some of them do require even a high like minimum spend. So that a lot of the bonuses within credit cards, they require you to spend X amount of money to get X amount of points. And if you can't hit that minimum spend to get that bonus, it may not necessarily even be worth it to chase that bonus. So if you know you can't hit that bonus, maybe don't like literally just don't try to hit it if you know you
Yeah.
aren't able to like pay it off or just even spend that amount of money. It just even on your base like based off your normal spend. So yeah, if you kind of fit that mold, yeah, credit cards are not necessarily the best tool to use.
Yeah. Yeah. Like you've mentioned that to me before too. Like, oh, if you have to spend $4,000 in 3 months on the card, is that going to encourage you to spend money if you would have otherwise spent less? So make no mistake about
Yeah.
it. The companies make money from these bonuses. Because most people do that. So making sure that, if you're going to do it, and, I was against it for a long time. I was like, I don't even want to risk it. I don't trust myself enough to have a credit card and trust myself not to spend it. But after a while, I came to I was like, okay, I can set it up on auto pay. I'm going to pay it off in full at the end of the month. So that way I never pay credit card interest. And as long as I have, I'll watch my cash balance and make sure I always have the cash to pay it off. And as long as those stipulations are met, I feel comfortable using it. I trust myself that I don't think it affects my spending any at all. Like, I've kind of divorced myself from how much is in my bank account affecting my spending. And it's kind of the same thing, like how much credit card limit I have. I've, I don't know, trained myself. I don't know if, does that make sense to you?
Yeah, no, you kind of put things in place to kind of even train yourself just to like spend less, and even kind of just going on off of what you said, the like with the limits, even if you're maybe like somewhere that's kind of like in between, where it's like you're broadly speaking financially responsible, but there you can maybe get yourself in a trap. You can actually even call up your credit card company to have your credit card limit just reduced, so you can even kind of just put these barriers in place that even kind of just stop yourself from getting yourself into like a worse position than you may be right now. So there are things kind of as what you're alluding to kind of like train yourself to put yourself on positive financial trajectory.
Yeah. It's interesting. That would affect your credit score. I've never heard of anyone asking for their credit limit to be reduced, but it makes sense if you're you know, not quite to the place yet where you are fully not reliant on it. But yeah, so that's interesting.
Yeah, even kind of just going on with that. Sorry, this is kind of same side
Yeah,
thing maybe,
that's
but like you're totally right that like it's having a low utilization actually does positively affect your credit score. But even just there are some banks out there that will look at your overall utilization. So or sorry, your overall credit limits. So for example, Chase actually has kind of like a under the radar rule where I forget what exact percentage it is, but Chase will not give you um, over a certain percent of credit limit based off your income. So I think it's maybe like around 30 to 40%. So they will not give you 30 to 40% or more than 30, 40% in credit limit based off your income. So um, basically looking at your credit limits, it's kind of like a give and take type of thing that you want to try to have a decent credit limit to try to help boost your credit score. But if you're out there applying for a lot of credit cards, it could actually potentially hurt you in getting more credit cards with specific issuers. So it's kind of like this fine balance that you kind of want to walk on with credit limits.
yeah. Um, yeah, because each time is a hard pull, right? When each time you apply for a credit card. But the other three types of churning wouldn't affect your credit score at all, right? Bank account signups and brokerage signups. Yeah.
Like 98% of the time, there are some bank accounts that they will pull your hard or will pull your credit, but in most cases, you can actually check it through everybankbonus.com or Doctor of Credit. So they'll just note like, hey, this is a hard pull, this is not a hard pull. But like 98% of the time, it's going to be a no that it does not affect your credit score.
So I guess we kind of got into my next question a little bit already, but what are the common mistakes with bank account churning? What should people watch out for?
Yeah, so definitely the biggest one is I know we've briefly talked about this is fees. So there are definitely a lot of bank accounts out there, as well as like credit cards and some brokerage accounts where they may charge some sort of fee, whether it's like a monthly maintenance fee for some checking accounts, interest charges with credit cards, um, maybe even some early termination fees with some checking or savings accounts that you might want to look out for. So obviously read the terms and conditions on to see what you need to do in order to stay as fee free as possible. Now, obviously there are some credit cards out there that will charge some sort of annual fee. So I will say maybe with that if you know that you can get either more rewards or more positive perks that will like outweigh the actual annual fee. I think with most credit cards, if you can do that, you're probably going to be better off. But if you find that you're not fitting that mold, then I would say probably it is best to kind of like avoid maybe annual fee credit cards. But yeah, for the most part, just try to avoid as many fees that you can possibly get, or at least that you're getting some sort of negative value from. The number two is, or the number two biggest mistake is knowing how long you need to keep the account open for in order to actually get that bonus. So this kind of goes in tandem with that early termination fee, as well as using your emergency fund to actually hit bank account bonuses. So make sure you know how much or know how long you keep the bank account open in order to actually get the bonus. Because if you close it early, they may claw back that bonus, as well as kind of hitting some sort of bank account bonus with your emergency fund. They may require you to keep that money in there for a certain period of time. So make sure you kind of are keeping tabs of, oh, you need to keep that money in there for 30, 69 days or however long it is. So you just want to keep tabs on the dates of for a lot of those things. The second one is not keeping money in the account long enough for, or I guess that was kind of like the second, the one I was just saying there with like savings accounts or bonuses. But I guess the next one is not double dipping it with significant others or whatnot. So kind of like I mentioned before, with any of the savings account bonuses or even like credit cards or whatnot, you can double dip this, a lot of those bonuses with your significant other. So you can maybe just have person one hit X bonus and maybe person two hit a different bonus, and you could both be hitting those bonuses even in tandem, whether it's like credit cards or checking accounts or whatnot. So you can kind of even maximize a lot of the benefits or money that you could be getting with across accounts or across credit cards or whatnot. So yeah, I would definitely say those are some of the biggest mistakes that I would look out for.
Okay. So that third one was kind of failing to optimize what you could optimize, which is Yeah, sharing it with your spouse. I was thinking like one of the things would be something I'm guilty of, like leaving accounts open, just having a bunch of accounts, like 40, 40 financial accounts, which not all of them are just left open, but you know, the management of it can get to be a bit of a bother. So I think that like one of the mistakes I've made is not being very good about closing them when I need to close them. And I bet a lot of people fail to like close or even use the points or use whatever reward it is, transfer money out even.
Yeah, one thing that's helped me a lot with that is I've, at least for all the checking and savings account bonuses that I have, I literally created an entire spreadsheet of all the bonuses that I hit, when I hit them, when I got the bonus, and when to actually close them, as well as putting the terms and conditions within that spreadsheet. So it's an easy way just to actually keep organized, as well as knowing what accounts are open, when you need to close them, and like what the terms and conditions are. So I know that that might be super tedious for some people, but if that's what you need to do in order to keep organized, I would highly recommend you do that. Also, even another way that could be way easier than that is if you have, let's say, a personal capital or mint account, you can just link those accounts to there. So you kind of have an idea of like, oh, this money's in, you know, all these accounts here. So it could give you an easy way just to kind of even just track it a little bit more passively rather than just typing it all up in a spreadsheet.
Okay. Yeah, I was going to ask you tips for staying organized. I was wondering if you had a spreadsheet. I was pretty sure that you did. Do you set like calendar reminders too? That's one of the
Uh,
things I do.
no, I
No.
actually don't, but I definitely should just because this is something that I did not do when I first started it, and there are like a few accounts that like I just kind of like close it and I totally forget when I close them. So I kind of missed out on some potential bank bonus opportunities later on that I could have gotten. But yeah, definitely keep some sort of spreadsheet or some sort of tracking system to kind of keep in mind of any bonuses that you are hitting.
So you closed it, but then you didn't record the date. So then you didn't know if it had been the 48 months required before you could sign back up at that same company for a new bonus.
Exactly. So it's like it's kind of like a shoot like I just have like no idea of like when I can actually hit the bonus again. I mean, there probably is a way that you can actually call in the company just to be like, hey, when did I actually close this account? But I'll admit I've been like super lazy about that and just not actually doing it. So that could be another way of just even checking into just calling into the company to see if you are eligible to actually receive a bonus if you are in a similar situation to
Yeah.
that where you're not necessarily sure if you can hit another bonus again.
Yeah. I think I bet people make mistakes around like making sure that they fulfill. I mean, I guess this is kind of common sense, but failing to meet the criteria for the bonus, which I think you kind of were alluding to anyway, but like making sure you hit like the $4,000 of spending in the amount of time. That's a whole separate thing to track. Not just like the dates of when you need to close it, but actually tracking your spending, remembering to use the different new card, that kind of thing.
Yeah, so kind of even going off that, a lot of the credit card companies have actually gotten pretty smart in that they'll actually put a tracker in the app or online for you. So I know Chase does this, Citi does this, and I want to say American Express does it, but I'm not entirely sure. But I know for certainty that Citi as well as Chase does it. That for their cards, you can actually just go onto their website and you'll actually have a tracker saying like, oh, like you've spent X amount of dollars, but you need to spend X amount more in order to actually get the bonus. So that does help a lot, at least for those two. In terms of, let's say, like a checking account or something like that, where you might require some sort of direct deposit, to my knowledge, there are definitely are not a whole lot of banks that have that sort of tracking system. So it's more of a lot of manual process of like, oh, I've put in direct deposit of X amount, but I still need to, X amount of dollars to actually fulfill the requirement. So there, it definitely is a little bit harder to actually get a gauge of how much you actually need to do. So
Yeah. I've been resistant to doing more checking account churning, just because the account that we have now, it's free checking and savings as long as we have direct deposit up to a certain amount. So like we
uh,
have some flexibility there, but I forget about it and I'm like, oh crap, I don't want to like accidentally get charged a bank fee from my regular, day-to-day checking account where all my auto transfers go through. Yeah.
That's definitely one thing that it kind of goes back to like the fees and just making sure you're trying to stay as fee free as possible. So,
Mm.
but I guess like there could also be some like ways that to also avoid that because I know that with banks that require some sort of direct deposit, there could be some other ways you can also avoid it. So, for example, I know with like Bank of America, Wells Fargo, and Chase, um, that you can either A, put in some sort of direct deposit, or B, keep some sort of like minimum amount of money in the account to avoid the fee. So keeping that minimum amount of money could be like an additional alternative. Obviously, it might be some sort of high amount of money that you might not be able to hit, but it still is another alternative that you could put in place just in the event that you are switching up your direct deposits to a different bank out there.
Mm. I think mine is actually an and. I have a minimum balance requirement and a direct deposit requirement. So then I'm not like
Gotcha.
having to remember both, uh, which is not a big deal, but
Yeah.
just it clutters up my brain, like trying to remember that and making sure that I do it. What are the best banks for churning? Like, are there any good deals lately that you have seen?
Um, there there's just so many out there. I will say for at least for checking account as well as savings accounts, I'm not necessarily familiar with a lot of the ones that are outside of the like northeastern region. So there totally could be some that I'm like totally missing, but maybe just even some general ones for there. I know that like City has a one where you can actually get at least $3,000 for just simply transferring over $15,000, which I know is can be a decent amount of money for some individuals. But if you are maybe like saving up for a large purchase, that could be pretty easy one to hit. I think it's about a I want to say a 9% annualized return when you actually take the slot amount of money for that requirement and put it on the annualized basis. So it's definitely a pretty decent return. I know for in terms of credit cards, there are a load of credit cards out there, whether it's this Chase Sapphire Preferred, the City Premier, um, a lot of the Hilton co-branded American Express cards have elevated bonuses. Also, the all the Delta cards right now have some sort of elevated bonuses. And I will say, coming out of the world events that happened within the past year or so, a lot of credit card companies are elevating a lot of bonuses in order to try to incentivize some sort of travel. So looking at some sort of like travel related card, I'm going to guess that for a lot of them, you will see some sort of elevated bonus within them. Now, obviously, if you can't hit them, may not be the best place to hit it, but if you are looking to travel, relatively soon, you might want to take a look at a lot of the travel related cards out there because a lot of them are offering some sort of elevated sign up bonus. So that could be something else to look into as well.
You mentioned a 9% return. How do you know if a bank account bonus is worth it? How do you calculate the return for people listening?
Yeah, so I kind of cheat and I go into this website called buyupside.com/calculator/ annualized return. And so basically what I do is I just plug in. So for example, going back to that city example, I just put in $15,000 as the beginning value, 15,300 as the ending value, because you would get the $300 as the bonus. And then the amount of years held, it would be 0.2219. So it's basically just take the amount of time that you need divided by 365, so 365 days a year. And then you will get the amount of years that will be in there. And then on an annualized basis, basically the calculator would be like, oh, it's in this case, it's 9.33%. And then on a percent return, it's just 2%. So that's just a flat, like
Hmm.
it increased by technically 2%. But if you put it on an annualized basis, it's 9.33%.
Would you mind sending me the link for that? Because
Yeah.
I just manually calculate things. I just plug it into my spreadsheet, like the number of um return on investment is usually calculated on an annual basis. You can calculate it other ways. You could calculate a quarterly or a daily return or whatever, but typically when people are talking about returns, they're talking about annual returns. So if you do a 3-month bank account churn, you would want to take the amount of money that you earn divided by the amount that you put in, right? And then annualize that out to see what that rate would be because it yeah, you want to make sure you
Yeah.
annualize it because you don't want to look at just like a partial because that's going to be understated. Because then if you're able to turn around and do it again, the amount of value you're getting out of that cash that you have is going to be much higher over the course of a year.
Exactly. Yeah. Because if you're kind of like as your note, yeah, as your note, because even with this like city one, you can hit it. I think you can hit it with like a P1 or player one and player two. So you can basically hit it twice if you have multiple people, or at least multiple times if you have multiple people within your household. So you're
Well,
getting,
well, even other, even if you
yeah,
go to a different bank and do a totally different bank account, like that capital that you have, that cash money is going to, be used throughout the year. Then if you're
right,
churning that emergency fund, so then however you use it, right, then it's going to be for the full year.
right. So it's like, yeah, you just want to include all the money that you're actually getting throughout that entire year.
Well, do you have any other tips or anything to share? Anything I
Uh,
didn't cover?
no, I think that's just about it. I think we hit like just about everything. So yeah, definitely was a pleasure being on.
Yeah. Where can people find you online?
Yeah. So as Roxanne mentioned in the beginning, you can either find me online on YouTube at Andrew Lopez Finance, or just anywhere where you can find podcasts at the Andrew Lopez Finance podcast. So yeah, that's
Yeah.
would be
And then
all
you
to say.
have, are you still using your Instagram? Instagram
Uh,
for,
I use it for stories. I actually totally forget what even the username is, but if you probably search for like Andrew Lopez Finance, it'll probably be one of the ones that comes up. So
I'll include the links below for Andrew's content if you would like to follow him. And I think you should. Obviously, Andrew is very detailed and goes through a lot of detail on like different credit card bonuses, different bank account bonuses. And yeah, so I think it'll be very helpful for people that are looking to make a little money on, their regular banking.
yeah, definitely. Yeah,
Thanks, Andrew.
was a pleasure being on.
Yeah, thanks. Bye.